So anyway, I want to bring in Kevin from White Oak FX. Kevin, how are you?
Not too bad, my man. Can you hear me okay?
I can hear you perfectly fine.
Oh, nice.
Can you please pronounce your last name so Stelios and Steve do not mutilate your last name?
It's Araujo.
Araujo.
All
Oh,
right.
interesting.
Okay.
Well, welcome. It's nice to have you here. I want to ask you, could you tell us a little bit about yourself and what you do over at White Oak FX?
I've been trading for, I don't know, just under 10 years. Um, I got my education from a school here in the city in Toronto. I'm just north of you guys, I think, and learned about supply and demand, and learned about the fundamentals of how the banks move the markets. So I got really interested in learning how is it that the markets are moving. We were told that they move randomly. So, how is it that the banks are controlling price if it's moving randomly? So I got really interested in that concept. And then when I heard about the banks, the large institutions having to report their positions to the CFTC, I thought to myself, oh my gosh, they're just basically giving, they're showing us their hands. So if I could just collect that information and piece it together and put it up on a spreadsheet and track what the institutions are doing, if it's true that the banks and the institutions are the ones that are moving the markets, I should be able to see what is about to happen in the markets based on the positioning of the bank. So I've been doing that for, about 9 years or so. And I've become pretty proficient at it. And I was sharing my analysis on social media. A lot of people saw it. People wanted more. They wanted to learn how I was doing it. And so I started a school and started teaching people.
Oh, and I want to ask you a question. Just because I spent many years trading with some bank traders, basically trading for a fund, and just probably my last really 5 of my last 7 years just trading on an institutional size levels. And a lot of the bank traders that I know, they've kind of moved away from the CFTC data because it's not as it's there's more information out there, especially in recent years. So how do you combat that? I mean, what technology has evolved, the way that the currency markets have evolved over the last several years. There's different methods to mask the way that institutions, quote unquote, show their hand. So how do you do that aspect of the business?
Well, first of all, there's a lot of misinformation out there with respect to the CFTC data and which data you should be looking at and how to read it. Okay, there's a lot of misinformation, in my opinion. So I've never paid attention to what anybody has said about how to study the CFTC data. I just studied it myself, took it upon myself to figure it out. And what I found is that, for instance, if you research how to trade using the CFTC data, a lot of what you're being told is you should be focusing on the commercial traders and their positions because they're the largest traders and they have the biggest size. And what I found is it's absolutely not true. It's the exact opposite of that. And when you realize why you shouldn't be following the commercial traders, they're mostly hedging their positions. So they're usually doing the opposite of what they think the market is going to do. So unless you want to trade and do the opposite of what the market is going to do, you shouldn't be following the commercials. So I haven't found any problems with using the CFTC data to give me enough information for me to trade off of. I haven't come across any problems. It's tricky. It's tricky. This game is not easy, as you know. Because like I said, if you go to a bookstore and you buy books on trading, most of the information out there is not really going to bring in consistent results because you're not dealing with the reality of how the market actually moves.
What have you seen? Like, obviously the euro has been the move in the euro has been staggering, and I think it's caught a lot of people off guard, especially over the last, couple months. What is your data been showing you that could have that could have led you in that direction, that it was going to break higher? Can you give us an example or show your screen, kind of show us what you've seen?
Yeah, sure.
Yeah,
No
let me go ahead and see. Can you go ahead and grab the screen, or do I have to do this? I think I have to do
Let
this.
me
There you go.
see. I guess I just click on. How do I?
At the very bottom, it says share screen.
There we go. And
Do you have the ability to pick one of your monitors, or your monitor that you have there?
yeah. You see my Excel spreadsheet?
I do. Yes.
Okay. Do you see my trading view now?
I
No.
see just your spreadsheet.
Oh, so it's just staying on the spreadsheet. Okay. How
Yeah,
do
it's
I?
staying on that one screen. It's not going to show multiple screens, but although you can display the entire desktop.
Yeah, that'd
depending on-
be. I'm gonna try to figure out how to do that. Is there a way to?
what your best thing is, you can show your spreadsheet here, and then you can bring over a chart, just move it over if that works for you. Does that work for you?
Yeah, I'm trying to share just the screen, so whatever I see on my screen, you can see it. Because right now, if I lower my spreadsheet, you still see my spreadsheet. Like if I minimize my spreadsheet.
Okay. But if you have, how many screens do you have? Two?
I have two screens. Yeah, physical
Okay,
screens.
so would actually, so you can't move your charts over to your screen.
Oh, I can, but I think the option that I chose was for just my spreadsheet to show
Yeah,
regardless.
you'll have to stop sharing and reshare and show the desktop, or the I don't remember how it calls it, but then you can have one on top of the other. So you can either share a specific window or your whole desktop.
Yeah,
So
that's
you
what I
have
need
to,
to do.
yeah, exactly. So you have to stop sharing and start sharing again.
Stop share. Okay. You want to send me that sharing screen again, and then share screen. Hold on.
Yeah, I think you
Yeah,
have
it's a
to hit the
And-
bottom.
Let's see, Microsoft Excel or screen 2. Okay, I think this is it. You can see my spreadsheet,
Yep,
and then you can see my trading view now.
exactly. Yes.
Okay, thank you.
Perfect.
Sorry, guys. All right. So great question in regards to the euro. So we had this just play out recently. Okay, so back in late summer, July, August, what we were looking at was we were tracking the non-commercials. Okay, and what we saw was that they were very aggressive with their short positions. How do we know this? Well, okay, so I'm collecting the weekly CFTC data, but not just that, but I went to the CFTC website and I went to the historical pages, and I retrieved all the historical data going back to the 80s on some assets that I track. But I only pay attention to the relevant positions, and relevant meaning, 20 years ago, the size of positions that the banks were holding were not nearly the same size as what they're holding today. So I use some of the features in Excel to take a look at and analyze just the data that's relevant going back to about, I think I'm doing it up until about 2010. I found 2010 till now is the data has been very relevant, meaning the size of the positions has been somewhat the same. And so what I was studying and paying attention to is there a certain amount of positions that the banks will reach that when they reach that limit, they tend to take profits? And I found that there was. And so I've been keeping track of what is the maximum size of short positions that the banks have ever held? And when they get there, when they get close to that number, do they start taking profits on their positions? And they do. And so what I found was back in late August, we were tracking their short positions. And as you can see, they were reaching numbers of 254,000. Okay. Now up here on my spreadsheet, I have the maximum amount short positions here being tracked, and it was 271,000. So I knew, and I have these cells set up for conditional formatting so that the deeper color red that the cells turn, the more aggressive the institutions are becoming with their position. If it starts to become less red, it's less aggressive, and so forth. If it becomes blue, for instance, that means their positions are very cooled off. They're not even focusing on those positions. So back in August, September, we saw their positions reaching highs of 254,000. Okay, their all-time maximum short position was 271. So we knew with great certainty that it was very likely the institutions were going to start taking profits on those short positions, because once they're filled to their positions to the max, there's nowhere else to go but upwards. Okay. Once you've already established such a short position, they can't keep adding to their shorts. I mean, technically, I guess they can. They could just have the government print more money and loan it to them, and they can continue. But that's not what I found that they do. When I track and follow what they have actually done over the last 20 years, they reach maximum sizes and they take profits. And so, as you can see down here in the chart, when price got down to the 95s, this is where they were reaching their maximum size of short positions. And we knew, you know, they were hitting institutional buying zones. Okay, this big green area that I have drawn here, this is some of the supply and demand analysis that we did. And this was an area of great interest for the banks to be buying the euro many, many years ago. And so what we found is, if the banks were interested in buying something between a certain price many years ago, what tends to happen when price gets back to those areas, for whatever reason, is they tend to buy again. So as price was coming into this area where we knew there was a likelihood that they would start buying or taking profits in short positions, when we looked at the CFTC data and we saw that they were so overly leveraged with their short positions, we knew, you know, coming into demand, you know, 254,000 short positions, there was the likelihood that they were going to take profits on shorts. And when they flood the market with these short positions, what's going to end up happening is price is going to end up shooting to the upside. So that's what happened down here. And this move here, this reversal to the upside was mostly fueled by the closure of shorts. And then later on, they started coming in and started buying the market.
Awesome. All right. Well, so what do you use? Do you use technical indicators to get you into your trades? What do you, how do you go about that?
So I'm doing multiple time frame analysis. So I'm looking at usually 6 time frames. But I only look at the higher time frames, the 12-month and 6-month, just on occasion, just to get a good idea of where we are at on the higher time frames. You know, are we dropping because we hit a massive area where the banks were accumulating short positions, or are we starting to rally because we're, you know, getting some demand coming into the market on the higher time frame? So I look at those 2 higher time frames, but the majority of my analysis is done on monthly, weekly, daily, and then for timing entries on a smaller time frame, I use 4 hours. So I'm doing supply and demand analysis. Okay, I'm locating areas where the banks were selling in the past and areas where the banks were buying in the past. And I'm trying to determine whether those selling areas are going to be used once again for selling when those areas get contacted, or if they're only going to be used for profit taking on long positions. And I do this analysis on each time frame. And by doing this analysis on each time frame and determining whether these zones are going to be used for buying or taking profits, or if these zones are just going to be traded through, it gives me an idea of where the banks are pushing price and where the banks are going to drop price and reverse price from. So for instance, I mean, if I was thinking about trading the euro long, for instance, okay, what I would want to establish is I would want to establish that the banks are buying the euro. And we have established that they are buying the euro. Okay. We can see that as of December 20th, CFTC data, their long positions were 249,000. But here's the deal. 249,000 is not that far away from their maximum size of 266,000. All right. And as you can tell, when you take a look at the coloration of the cells, they've been getting redder and redder and redder. And the darker the red color, the more aggressive their position. So I do want to get into long positions when the banks are buying, but I don't want to get in when the banks have already been buying and they're aggressive with their buying, because I know it's just a matter of time until they're going to run out of positions to open, and they're going to start taking profits on those long positions. So even if the technicals are giving me an indication that price could rally up significantly, if I see that the positions held by the institutions are not in a situation that is favorable for me to accumulate a long position, then I won't look for the technical indications and technical signals to enter into a long trade.
That makes sense to me. All right. Well, Kevin, you know, I'm sorry that Dale is not here. I have a feeling it's more of a holiday hangover type of thing.
Sure.
Than
Of course.
anything. But what's the best way for traders to follow what you're doing?
Well, I'm on Twitter. You can follow me at White Oak FX. That's the two letters F and X. You can follow me on there, and that's pretty much where you'll see me.
Awesome. All right. Well, I want to thank you for being here today, and I'm going to make sure that Dale reaches out with you, and so he can give you a proper interview, because I'm just not. I wasn't ready because I didn't know I would be here today, so I didn't do the research that I normally
That's all
do.
right, man. You did a great job. I appreciate being here, and I appreciate you having the time for me. Thank you.
Yeah, sure thing. You know, Kevin, we appreciate your time, and hope you had a wonderful holiday season, and hope you have a happy New Year, you and your loved ones. So
yeah, thank you so much.
And like I said, I'll have Dale reach back out to you, and I apologize for him. You know, on behalf of him, I have a feeling it's, like I said, holiday hangover. So have a great one, and thanks everybody for tuning in today. We appreciate it. We will be back here tomorrow, so don't fret if you guys are wondering, you know, if we're going to be here all week. We'll be here the remainder of the week for the F.A.C.E show. So I'll see you tomorrow. So thank you, everyone. Thank you, Kevin, and Steve Stelios. Have a great one.
Thanks.
Thank you, everybody. Thank you, Kevin.
Thanks, guys. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.